Mohit Malhotra, the CEO at Dabur India, and try and figure out all these questions. Mohit, hi, morning. Good to have you on the show. Now, the consumption moderation or slowdown has really spooked the market. But what factors you think are, one can cite? Is it prolonged winters, among other things, for the same? And has the summer of 2019 been any better? Or do you sense that this slowdown is here to stay?
So I think two parts to your question. I think the first part of your question is the slowdown. So I think we are seeing signs of slowdown still in the first quarter also. I don't think the slowdown is abated a little bit. Initially in the last quarter of last fiscal, we thought that it's because of season and winter getting prolonged, and therefore the beverage piece in our business had registered some slowdown. But I think coming in the summer, we think that the slowdown is more broad-based to the economy because of the liquidity crunch and a lot of other macroeconomic factors. I don't think it's related so much to the winters. That being said, I think for us, it's a tad better than what last quarter was, and we see rural economy chugging much better as compared to urban. So as far as the overall business is concerned, this quarter is seemingly better than the last quarter for sure.
Right. It's interesting that you're not that worried about the rural slowdown. How's that?
India essentially is an agrarian and a rural-based economy. 70% of the population resides in the rural India. So rural is a majority part of consumption of the consumer staple space. Dabur has a high reliance on rural, with rural contributing to around 45% of our consumption coming in from rural. So rural continues to trend at around 2 to 3% higher than the urban growth rate. And what slowdown that we are seeing because of the income in the hands of the consumers has actually gone down, because the stimulus that the government has announced has actually not got transmitted in the real hands, and therefore the income in the rural is actually still kind of shrunk, and which is reflecting in their purchasing power. That being said, I think it is momentary. It is not something which is structural. We'll wait for the budget announcements on the 5th of July to see if there's some sort of a fiscal stimulus announced by the government to give a push to the overall economy, rural being more so. And if the monsoons are pretty okay, I think rural recovery is definitely on the cards, especially in the second half of the year.
You mentioned that momentary hit to purchasing power, but monsoons are not looking good. What will happen to the agrarian output, I think, is a big question mark there. Rural wages are already in distress. So are we in for a prolonged winter, so to speak, for your business?
We are waiting for the budget announcement, and we think there will be some announcements of fiscal stimulus by the government, and if it reaches out to rural, and that's in line with the manifesto of the party, and if they're true to their manifesto, I think there will be some announcement of fiscal SOPs for the agrarian economy, and if that transmission happens, I think rural should recover going forward.
Liquidity is also a problem, and it has cited a lot of consumption companies. Do you think that the government could put money in the hands of individuals?
Liquidity is definitely an issue, and liquidity is kind of translating into a little bit of slowdown also. But liquidity, again, from last quarter, if I see in the current quarter, liquidity is kind of become a little better, and more with the repo rate getting cut, I think liquidity should further improve. The way it translates to our business is that when a wholesaler is to go and take back his funds from the bank, and the bank has got a lot of red tape because there's a liquidity crunch in the bank, so therefore he takes good around 5-6 days before the release of the fund happens to him, and that provides a little crunch. So therefore we have to even provide with credit to that wholesaler or that retailer. But I think as we go along, things are seemingly improving on the liquidity side also.
Okay, Mr. Malhotra, let's talk about individual segments. Are you worried about the slowing traction in the F&B part of the business, particularly for juices? Because I understand that competition there is fairly intense.
Yeah, it's not a worry. I think it's a yo-yo in the demand. In the last quarter, we saw the winter got extended, and therefore it was kind of pushing back on the consumption. But as we speak, the competitive intensity is definitely gone up. So, like you rightly said, it's both the carbonated beverages now wanting to diversify into juice segment, and also consumers are also shifting because there's multiple players entering into the milk-based beverages. And the share of wallet for the consumer is moving towards the milk-based beverages. So I think it's momentary because there's so many entrants coming into the marketplace. So we, like I said before, we'll put our heads down and keep working towards a lot of innovations in the juice segment, and we are committed to it. Our market shares of all-time high. We are around market leaders with 56% market share. Our market shares are improving consistently in the juice segment. So we'll be stepping up on a lot of innovations, and you'll see a lot of innovations coming in from the stable of Dabur in the beverage space also as we go along.
Now, analysts are also saying that the oral care sector is getting aggressive when it comes to pricing. Your peers have been displaying pricing aggression. How are you viewing competition? What's the strategy here?
I don't think there's any risk per se in the segment because there's a huge tailwind towards the natural, herbal and Ayurvedic segment, and this Ayurvedic segment is growing at the rate of around 20%, which is carved out of the main oral care segment. The other part of the segment, which is more regular calcium carbonate toothpaste, that is growing at lower single digit, whereas the herbal segment, which is good 30%, is growing at around 20-25%. So that's a tailwind provided to the companies like Dabur who've got herbal positionings in the oral care. That being said, price point has definitely become an issue. So all the premium, popular and also the economy players have reduced their prices, and everybody is now available at a 10 rupee price point, although the grammage could be little less. So there is a competitive intensity which has gone up, but I think structurally there's nothing wrong, and we are also tactically handling that competition by way of trade and consumer input. So I don't think there's issue. We have an economy brand called Dabur which operates at an economy price point of 10 rupee, which lost its sheen because value equation to the consumer was no more visible. It was operating as a discount play. We are repositioning that particular product, and you'll see a re-avatar of Dabur entering market as we speak. I think we should be invoicing the new offering in the market. Hopefully that will be able to bolster our whole oral care play in the market. But that being said, we are in a good place, and there is a tailwind which is helping our entire oral care foray in the marketplace. Yeah.
Among all the sectors, which one would you say is facing the stiffest competition? I mean, where do you think the slowdown has hurt you the highest?
See, we are committed to healthcare. The window to Dabur's equity in the consumer's mind has always been healthcare, which is Dabur Chyawanprash, and healthcare contributes to good 35-40% of our portfolio, where we guys are market leaders. We are market leaders with 40-50% plus market share. So I think we are committed to the healthcare sector, and healthcare sector we don't see much of competition because we are the ones who set the pricing in the marketplace, and other players actually follow us. So whether it's Chyawanprash, Pudin Hara, Honey Trust, Lal Tel, and the multiple brands which are there in the consumer health space where we command the price premium, and also the brands continue to do reasonably well for us. So I think that is where our major focus is going to be, where the competitive intensity is less, the categories are less penetrated, and therefore there's huge headroom for growth also going forward. I talked earlier, we got a power brand architecture that we put in place. We got 8 power brands, out of which around 5 power brands are in healthcare sector. We have Honey Trust, which operates in the cough and cold area, which is a huge market potential, Lal Tel in the baby care area, and Pudin Hara in the gastro area. So we are continuing to focus attention. Last year also we grew by double digits, and this year also we are continuing to sustain that kind of growth till the time we reach around more than 100 crore level in each one of our new OTC brands that we've decided to push on. Yeah.
And finally, for FY20, what should shareholders watch out for? In terms of the targets that you've set out, you have already mentioned that the second half is going to be better.
See, we've targeted for a mid to a high single-digit volume growth, And if there is an inflation, there'll be a price increase which should be in a position to set off that inflation. But as we speak, the inflation is pretty benign, and we don't see we operate in three buckets: agri bucket, specialty chemicals, and also petroleum linked products. So we are not seeing inflation as far as the first quarter is concerned, but we have to wait and watch and see how the inflation pans out to be. So, but we are committed to a volume growth of mid to high single digits and beat the market growth rate. So if the market is chugging at around 5-6%, we should grow higher, and we are committed to gaining market shares in most of the categories where we are present. So it all depends upon what the market growth rates are. So market share increases, and healthcare being a major foray, and stepping up on innovation, and that should lead us to a high single digit sort of a growth rate in the end of the year.
We'll let you go on that note. Appreciate you taking the time out and joining in, giving us a roundup of what you're seeing, particularly the fact that you've acknowledged that the rural slowdown is performing better, the rural market is performing better, and you're not really seeing a structural slowdown when it comes to the rural markets. That's the outlook on the consumption space, and who better than Dabur to give us a deep insight.